So in the last presentation, we talked about venture capital financing and how it works, and the fact that you guys now know more than almost the rest of the US population about how venture capital financing works. Let's assume that you've decided that for your company, this is the right path to choose. What do venture capital companies want to see in a company? At JumpStart, where I spent a number of years, we looked at really three things. It's the product, it's the market, and it's the management. And if you think that way, you kind of get into the right place. So in terms of products, what they want to do is one of the best people that I'd worked with in venture capital had said, she called it the secret sauce. What do you have that's different than somebody else? The secret sauce of Twitter is that nobody had thought of that before. It's just a great idea, and it caught on. I was one of the people that maybe didn't say that I thought it was going to catch on, but it did. That was their secret sauce. Their secret sauce might be that you have a chemical formulation that makes people's hearts healthier. That would be an incredible secret sauce. It may be that you can generate wind energy in an efficient way. That could be your secret sauce. It has to uniquely solve a problem. You generally are looking for compelling economics. So if it's an industrial setting, if you say you invest in this product, my product in your company, you're going to get payback on that in 1 year. That's a very, very good number. Those are compelling economics. We look for business model. And business model says, all right, you got this product, you're all excited, how are you going to sell it? The software is a great example. How do you buy software? I don't think any of you pay for Facebook. So what is their business model? Their business model is making money on those ads and referrals, because I don't think any of us pay for Facebook. That's their business model. A business model in a medical device might mean that you have got to figure out how to get insurance companies to pay for it. So, because if they don't, you're dead. It won't work. So that's your business model. You want to understand the technology advantages. You've got to have that quick return on investment. It'd be nice to see a quick path. If a venture capital investor sees that, oh my God, if this thing works in 4 years, this is incredibly valuable, they really would like to see that. But they would also like to see protectable intellectual property. VCs will put a big, big premium on saying, you've got patent protection that keeps other people out. If you don't have that, we've got to get confident that you have the ability to run fast. Typically in software businesses, it's a run fast strategy because you just can't get there. You usually can't get intellectual property protection, but there's a lot of good examples of people running fast in the software business. In terms of market, so let's say you have all those things, but you're in a tiny, tiny market. In a small market would be a $100 million market. It's just not that interesting because it can't get that big. Generally, VCs are looking at $1 billion markets, $1 billion type opportunities. Personally, I think it should be lower than that because I'd rather have a significant chance to get at a $500 million market than a minuscule chance of getting at a $1 billion market. But usually $1 billion is a hurdle rate that people sit with. You've got to fit with that VC's investment profile. Typically, you don't see other than really, really big VCs, and they just divide it into kind of sections. A smaller VC is going to invest in medical technology and maybe energy, but they're not going to do software. If they do software, they might do software and some industrial solutions, but they don't touch the medical stuff. It's different. So you've got to fit their profile. They want hot markets. So the hot market in the last few years has been energy. One that'll be interesting to see in the next few years is the shale gas opportunities, because there are some venture capital type of opportunities there. They want to see you be able to ride waves. We're currently in a wave, certainly in social media. I mean, the term social media 5 years ago, I don't think people even knew what it was. So we're on a wave there, because when you ride a wave, lots of people can be successful at the same time. But they want to see broad, really well-defined market needs. If you really don't know why people are going to buy your product or who your market is, and I coach companies right now with a company that, I said, oh, it sounds great, who's going to buy it? And they really didn't have a good idea. That's not what they want to see. They want to see those markets well-defined. The last thing is management, and they look for management that have done it before. They look for management who have what are called domain expertise, so that a CEO should know something. If they're an energy company, should know something about running energy companies. They want credentials. I mean, I've had companies that I've coached. One of them had a MBA from the University of Michigan. He decided not to put it on his slides, which I said, well, you better tell people about that because that's significant. So your credentials matter. So where you go to school and the fact that you've gone to school matters. They want to say that you have the willingness to add appropriate staff, that you're not going to sort of choke the company by being too cheap. And then, is the founder going to be the CEO? The answer is probably not. It's just a reality. If you founded the company, you're probably not going to be the one running your company. It's just the way it is, because very seldom is the founder with that original idea have the management skills to run the company when it gets large. Okay, you make a presentation, and it's a big deal to make what's called a pitch. When I raised venture capital, I talked to over 75 investors before we got the right one, and so I got pretty good at that presentation. The most important thing in your VC presentation is that you have a compelling story. What I would test with companies that I coach is I would go over the dinner table. And if I could tell the story in 2 or 3 minutes before my wife and kids lost interest, and it didn't take long for that to happen, then they might have a compelling story. So you've got to have, it really is about the story, and which is why this is fun, because it's not about the dry kind of lots and lots of financial details. They want to see a description of the technology in what I call a discovery channel fashion. You can't tell them down to the electron level how it's working. They get bored. You'd have to be able to tell them in the same way that the Discovery Channel handles very technical topics to relatively intelligent people, because most of the people watching the Discovery Channel are smart, but they're not all engineers or physicists or scientists. So you've got to tell it in that simplistic way that has them get it. They want to see market analysis, both top-down, so it's just looking at it from a general point of view, and then from the bottom up, how does that customer actually view it? They want to see both ends of that. They want to know how you're going to make money, as I mentioned. They want to see examples of how somebody's going to benefit from your company, and they want to know you're solving a big problem. If you have what's called customer traction, which means you've sold something, they want to know how that's worked as well. And they definitely want to see your intellectual property and how you're protected. You've got to go over what that is, because that's one of the things that makes the deal attractive to them. Other things, so you see a lot of things, and generally for venture capital presentations, in front of a VC when it's a one-to-one, you typically get a half an hour plus questions. In structures like JumpStart and others, it literally can be as short as 15 minutes. In a venture fair, you might get 8 minutes. So you've got to hit all this stuff in that much time. But you've got to go over the management team and background, advisors, particularly if they're important in the industry or a big deal. Product development timeline, it's a summary. It is not like every single thing you're going to do, which we've seen a lot of people do that. But how do you go from where you are today, where you expect to be next week, where you expect to be next month, and where do you expect to be next year is pretty important. Basic financials. They don't want all the details, and this is different than if you've taken accounting or economics classes where you go into detail. If I'm a bank and I'm investing in your restaurant, I do want to know how much stock you're going to keep and how much turnover you're going to have, and I want to see the details that you really know it, because you're really close. In the venture idea, I want to know that you've got something that has a high gross margin and has the ability to grow, and that you understand what it's going to mean to grow. But I don't believe the details, because I already know that it's going to take twice as much time and twice as much money, because I've seen that before. I want to know how much money you need, and do you need just my money? And do you think you can get to what's called cash flow positive, to where you're putting off cash, making money as opposed to eating cash? And then do you need somebody else's money to do that as well? Okay, things that are unsuccessful in these presentations. Detailed financials. We see people taking 10-point font Excel spreadsheets and putting them up on a slide, which you can't see anyway. I certainly can never see any of those. And you just don't do that, because nobody wants that level of detail. And I don't have a reason to believe you if I'm an investor at that point. You don't even know what you're going to sell, and you're telling me what you're going to spend on travel in year 3. It just doesn't make any sense. When you do esoteric and detailed technology descriptions, it's just a yawner. Nobody really cares. It's just way more detail. I've had people sit there, one person with a company that I coached, she leaned over and she said, "What the heck is he talking about?" And I knew we were dead. We were not going to get the money at that point. If you have market analysis that is clearly questionable, things like if you say, if 1% of the population buys what I have, we'll be great, never works. Or it'll go on the web and it'll just be viral. Well, that happens, but it doesn't happen enough for anybody to bet on it. You also don't go through the detailed legal history of the company, which a lot of people do. It's just not exciting. So I guess I'm going to change gears here a little bit and talk about the entrepreneurial ecosystem, particularly in Northeast Ohio, and how it tends to work. One of the things we recognized in Northeast Ohio is that venture capital tends to agglomerate, which means it likes to cluster together. So the big places for venture capital, the 2 biggest, Silicon Valley and Boston. Lots and lots of companies. I raise money in the Boston area. I would rather be in Boston if I'm raising Series A venture capital than Cleveland. However, if I was a very, very early stage company, believe it or not, I would rather be in Cleveland than Boston, and I'm going to tell you why. It tends to be the rich get richer. We recognize that, and so we structured a lot of things in Northeast Ohio around attracting venture capital. And the measure of these structures is generally not how many jobs we create, which can be politically explosive. It generally is about how much extra capital do we attract. And the idea is that if you attract the extra capital, hopefully from outside the region, coming into our region, the jobs will follow and it'll happen. We don't want to be what's called a flyover state. States like Ohio, Michigan, parts of Pennsylvania, they were saying, well, they get on a plane in Boston, they fly to Silicon Valley, and they fly over us. And you don't want to be that. We want to be a destination. A few destinations have done well. Austin is a great example. Austin is the 4th largest city in Texas, but they are the capital for venture capital in that state. And it's because they followed these rules. They saw that the rich get richer, some venture capital was there, and they have a major research university at the University of Texas. Those things drove the fact that they are where are the center for venture capital in the state of Texas. So we have a number of venture development organizations. One is called JumpStart, which is very, very well known. Another one is called Innovation Works. They're in the Pittsburgh area, and we're almost like brother-sister type organizations. JumpStart learned a lot from Innovation Works. In my impression, we're actually better than Innovation Works. So the Browns aren't better than the Steelers yet, but we are probably better at this. But they're very, very good. Usually it's $250,000 to $500,000, which probably sounds a lot to you guys, but it's really not a lot of money to get one of these companies going. It almost never will get the company to where it needs to be because the expectation is this really gets you to the next funding level. But we do a lot of coaching and support. So that's what I do for part of my job is I coach these entrepreneurs on how you make your presentation, how you organize your business, what venture capital means. I've gone through this presentation with numbers of them, with the objective of attracting the next level of funding. But working backwards, as you build it, you need funding at lower levels. So one of the things that I experienced when I coached companies through the JumpStart process, if a company didn't get the $250,000, what do we do with them? If it's just a bad idea, then you toss them to the side because that's the nature of this business. But if you're in a case where, with a little bit of help, but they just need a little bit more time, you'd like to know there's $25,000 or $100,000 to kind of take them through, particularly if you don't have friends and family type funding. So we have now in Northeast Ohio created a number of funds. If you look at the bottom here, the Innovation Fund at Lorain County Community College is a very notable one. We've also got some funds in Cuyahoga County and others that you need to have an array of funding to really make things work. So you have incubators like YBI, which is the Youngstown Business Incubator, an organization called Techlift, which was at JumpStart originally, now is kind of turned into what's called the JumpStart Entrepreneurial Network, ways to either coach the entrepreneurs or systems to give them funding. The North Coast Opportunities Technology Fund is for companies in Cuyahoga County, for example, and it invests actually public money in a venture-like structure. I won't go into the details. It's not really venture capital because as a county entity, they can't do that, but it's a loan, but it feels like venture capital. Let's take a look at how an ecosystem develops. We've seen an ecosystem in Northeast Ohio develop like nothing else in the country that the country has ever seen. And I'd like to take you through a little bit of history. I personally got to live this. At the beginning of the slides you're going to see, I was an entrepreneur traveling weekly to run a company in Boston. And eventually I decided to do some give back in my career where I worked with these various structures. So I literally got to watch this happen. So let's see how actually the entrepreneurial ecosystem in Northeast Ohio developed from 2002 to today. So within Northeast Ohio, we've had just a lot of growth in these kind of structures. In fact, we're probably thought of as the most far-thinking region in the entire country in terms of these entrepreneurial support structures. And I can say honestly, I was raising money in Boston. I'll tell you a little story that I was traveling in the Boston area with my now son-in-law and daughter, and I pointed to a building. And I said, you see that building over there? It's right off of Route 128. And they said, yeah. I said, there's more venture capitalists in that building than there are in the entire state of Ohio. And it's not even close. And that was true. Boston and San Francisco, great places to raise, that Series A kind of venture capital financing. I'd rather be there for that. However, after we've built some structures within the Northeast Ohio, I've had people from Boston say to me, if I was doing an early stage company, and I can tell you in my personal experience, if I was doing an early stage company, starting something up where I needed to go through that process of getting $100,000 to $250,000 to $1 million to $2 million, I'd actually rather be in Cleveland than Boston. And that says a lot because it hasn't always been the case. If I take you back a little bit, in 2002, I was raising money for my company, talking to lots of VCs all over the country, mostly Boston area. But I tried to raise some money in Cleveland just to see what was here. And I found it was a wasteland. This is what it looked like. We had a few incubators here and there, not really well known. And my company was beyond incubators, and we were physically in Boston anyway, but there was really only 2 companies in the Cleveland area that could even finance a company like mine, called Morgan, Thaler, and Primus, and they often didn't do deals like that. So it was not even a chance for me to raise money in my local area. Well, we realized that in this environment, and in 2002, BioEnterprise came along with a focus of taking what we had at the Cleveland Clinic, Case's biomedical engineering department, university hospitals, and other various organizations, and a few successful startups like Steris, and really melding them into a biosciences growth area. And they've done a tremendous job. They took a focus of really asking the customer what they wanted and giving it to them. So they would go to venture capitalists and say, what areas in medical devices and pharma do you want to see? And we'll make sure we encourage those things. It's been tremendously successful. In 2004, JumpStart started by NorTech, and this was a structure that's focused on that early stage funding for companies. In the beginning, focused on coaching a lot of people, but getting them down to 10 or 12 investments who got a lot of help, and it's been very, very successful. And in both cases, you see the arrows in this graphic, they really were focused on getting out to the venture funders. So it was an externally focused type of an approach. There was another fund called the Early Stage Partners, funded by some state money, that also funded that, but not a lot, but this is sort of 2004-ish kind of time frame, but they did really, really well. So things are starting to grow. JumpStart started to get national renown, as did BioEnterprise. In 2007, the state kind of stepped up and did what they called the Entrepreneurial Signature Program, and that added a number of different structures. Number one, it brought focus into a number of incubators. So they picked the 5 incubators they had focused on before in a program called the Edison program, but they put a lot of structure around it to say you've got to work together to drive entrepreneurial results. And so you had a group of organizations. Glide is in the western part of the region in Lorain County. Braintree is in Mansfield, Youngstown Business Incubator, and Akron Global Business Accelerator, obviously in Akron and in Youngstown. And then Magnet is in downtown Cleveland. So they got structure to do this. And then also they added some organizations which eventually became part of JumpStart. One was JumpStart Techlift Advisors, which was a group of entrepreneurs and residents, people that had started companies that were technically knowledgeable in that area, and I ran that organization. So for example, my biosciences person, she had raised over $25 million in venture capital. She raised tremendous amounts of capital. My person for advanced materials, for energy, for software, were all experienced in those industries, both running the company, understanding the technology, and raising money. And so we use those people to coach other organizations. We also took an inclusion focus, knowing that particularly in venture capital, women and minorities tend to be underrepresented. An interesting thing for women is even though there's less women who run venture capital companies, if they get in front of a VC, a woman's chance of getting the funding tends to be a little bit better than a man. We're not sure exactly what that means, but what it says is there needs to be more opportunity. So JumpStart's inclusion advisors focused on women and minorities. Then, at that same time, they added a bunch of different kinds of funds that really allowed us to grow a little bit more, because you have to have the money. An entrepreneur comes for help, but they really want money. They accept the help, and they realize the help was more valuable in some cases than the money, but only in the context of getting the money. So a number of structures came in to fund before JumpStart. So I've talked a little bit about the Innovation Fund at Lorain County Community College, nationally known structure for allowing community colleges to fund early stage ventures. So if you have an idea, you can get a $25,000 grant that doesn't need to be paid back from the Innovation Fund, or you can get a $100,000 matched investment, which typically is one step before you go for JumpStart or other kinds of funding. But the state also funded some angel groups. So there's the North Coast Angel Group, which is 100 angels in Northeast Ohio that invest all over the region. There's another one in Columbus called Ohio Tech Angels. There's a for-profit fund called Glengarry. All got some state money to really encourage this ecosystem to happen. In addition, places like Cuyahoga County started things like the North Coast Opportunities Technology Fund to encourage technology companies to be in their locales. Since then, actually, other ones have started in Barberton and in Canton and a number of other places throughout the region. So it's kind of happened pretty well. And because of that, BioEnterprises and JumpStart's influence on venture capital funders throughout the country became more significant, because those VCs started saying, these guys they take some of our risk out because they do all of the early stage evaluation for us. And so we like that, so they want to have a relationship with JumpStart and BioEnterprise. The state also did some things to encourage investment by pure VCs. So what you see just added to the graphic here were really VCs that invest in companies. It started with early stage partners back in 2002, but other companies like Rivervest, Draper Triangle, are from outside the area. They put a person on the ground in Ohio and they agree to do a certain number of deals in Ohio, and for that, the state of Ohio invests in their fund, typically with pension funds. A very, very successful program called the Ohio Capital Fund. We've seen a tremendous growth in this ecosystem, because literally we went in 2002 from this, a virtual wasteland, to this, which is, I think, the most robust early stage entrepreneurial ecosystem in the United States. We've had people from all over the country ask us how we did it. Actually, JumpStart has an effort funded by the Department of Commerce to help other communities do this. Not too well, though. We want to make sure that we keep our advantage. But really, we've now have an ecosystem. Just on the funding and the coaching side, you see here that's very, very robust. And then you add to it the different shared resource centers that have been part of this course and other structures. You can see that this is an area that's growing, and we've seen it in recent job reports where Ohio recently showed that in high-tech job growth, we were number 7 in the country. Northeast Ohio, so as a region, as a section, we were number 7 in the country in high-tech job growth. And I just don't think you would have seen that 10 years ago. So we're glad to be part of this effort, and hopefully it was useful to you.